What's going on, guys? So today we're talking about what a good investment portfolio foundation is, and there's lots of different things you can do to invest your money, but we're going to talk about the top picks and the top choices for starting off investors and even investors who have been doing it a long time. Stick around and watch the video, and catch you there. Hey guys, you'll hear me refer to ETFs as electronically traded funds throughout the video, but they're actually exchange traded funds, so please disregard me calling them electronically traded funds throughout the film. I call them electronically traded funds because that is a common name that I was referred to them, or that was referred to me when I was first learning about them. Considering they can be done electronically. Some people do call them electronically traded funds, but they are technically called exchange traded funds. So when I refer to electronically traded funds or ETFs, just know that I mean exchange traded funds and not electronically traded funds. Hey guys, welcome to the video. So if you're a new visitor, go ahead and like this video and subscribe to my channel. And we got a couple important things to talk about today. So we're talking about the foundation, what a good foundation is for, new investors and even investors who've been doing it for a while. So our first thing to talk about today, and this is very, very important to know, but it's if you're a new investor and you really don't have any clue of what you should be investing in, whether you're first entering the stock market, which is, I think, typically what people get started with because it's it doesn't take as much to invest into stocks as it does, say, real estate. So it doesn't take as much upfront cash flow to kind of start investing. Stocks are a good choice for investments. I'm really big in the stock market. They should be chosen wisely, though, very wisely. One of my favorites is I like EFTs, which stand for electronically traded funds. EFTs are very nice because instead of picking individual stocks, it's kind of a professional stock picker, and what they do is they gather up a group of stocks to kind of list them in a category of something. Maybe it'd be like a high dividend yield for like high dividend stocks, or even something as simple as just following the market. Typically when you follow the market, you can see anywhere from a 6 to 10% return on average. So investing into an ETF that is strictly based around the market overall, that's a good idea to do. Investing into like something like VOO, VOO, which is a Vanguard ETF. It's an index fund. And it consists of a lot of blue market stocks, which are high-end companies that have been on the market for a long time and have a pretty exceptional market cap. And some of them have higher PE ratios, but that's okay if you really know what you're looking for. PE ratios are, typically you'll see them around 20 to 25. Anything over 25, we're talking about a little bit too much. It's a little too expensive to buy. A PE ratio is a price to earnings ratio. So you kind of want to, really good stocks. You can really see, what their PE ratios are. They're going to be under 20 for a really good PE ratio. But PE ratios, just because it's over 20 or 25, doesn't necessarily mean that it's a bad stock to invest in. It'll just take a little more research to kind of look through everything. So these ETFs are very nice, and they're nice because they're electronically traded. So you don't have to worry about going to a brokerage office. You can kind of do everything online. Robinhood actually offers these ETFs, and they're mutual funds, index funds, whatever the case may be. They offer them at and if you go to the Vanguard website and invest, typically you're going to want to have like a lot to pay down, and that's what they require. But if you're on Robinhood and you're just looking to invest into a single share ETF or a single share index fund or mutual fund, they allow you to do that. So I think VOO, which is the Vanguard S&P 500, pretty much tracks the S&P 500 by having a variety of companies that really big cap stocks that succeed in the S&P 500, and so it pretty much bases its market fluctuation around the S&P 500 itself. So the reason that's a good thing is because the market can typically put out anywhere from 6 to 10% return, which is a lot more than what you're going to see in a traditional savings account at only 0.02% on average. I would definitely go for the 6 to 10% over that. And I think the index funds for the market it's a great way to do so, because over the years it shows history of gradually increasing at about 8%. So that's somewhere you want to definitely load a bunch of money into. Now, guys, we cannot think that this is going to be a short-term investment, and because it's not. And you're going to see price fluctuations a lot, because the market is always up and it's always down. It's constantly fluctuating. So the thing is, you really want to invest in these index funds for the long term, 20 to 30 years. These are the things that you're going to see a consistent 8% with when you invest in the market long term. The reason I would consider this the foundation to your overall portfolio is because these are going to be the stocks, or these are going to be your index funds, your ETFs, your mutual funds. These are going to be the things that are constantly growing over the long term. These are going to want to be the things that you're putting a good amount of money into. Some people think that a majority of your investments should go into mutual funds and EFTs and index funds. That's not necessarily the case. If you're looking for it's a very low risk situation when you're investing in these EFTs, as long as they're going with the market itself. Now, if you're investing in low cap stocks that you are speculating are going to have a ton of growth within the next year, that's also could be a good investment, but much more risky. And the reason being is because these low cap stock, they can jump in value because they're a low market capital company, so they're not established yet. They're still establishing themselves. But the good thing about these stocks is when you invest into these low cap stocks, and sometimes, if they're a good company and you really do the research on them, you can, even sometimes within a year, you can see 2,000, 3,000% return. And if you dump a lot of money into that, that could potentially be a huge return for you. Now, people that are becoming millionaires, doing low cap stock trading, it's an efficient way to do so, but you really have to do your research on the company. You can have a ton of growth if you're investing in the right companies. The index funds that I'm talking about, these are good foundations for people who don't necessarily want to go and research the stock market every day. They don't want to stay on top of company fluctuations. They just kind of want to put their money somewhere and have a safe return of about 8%. And that's what these are really for. And for people that don't want to take the time to learn the stock market and don't want to take the time to read up on all these companies, these electronically traded funds are probably your best bet. The index funds, I have my largest amount of shares I have through Robinhood right now is an ETF. It is the VOO Vanguard S&P 500 index fund, and that is currently my largest shareholding I have with Robinhood. Robinhood is my second brokerage account. I have some through Fidelity. I like Robinhood because it is a zero commission, zero fee platform. Very easy to use, very basic to understand. So if you're new to trading stocks, I would definitely recommend checking out Robinhood. Another point I want to make is that you don't necessarily have to go for index funds, mutual funds, any electronically traded funds. You don't necessarily have to do that. You can find a company who has consistently showed growth over a period of time, and you can go and research that company and look at what look at everything, including the PE ratio. That's a very important thing to look compared to what their share price is listed at. Robinhood will actually give you a very decent description of what their market price is at the time compared to what it is for the 52 weeks on average. This is a very nice feature because you can see if you're buying it for a good price or a high price. And so typically when these nice value companies go on sale, that's really when you want to buy them up. We'll go into detail in another video what company stocks I own for good returns, but you can also do company stocks. So don't just think you have to do all ETFs, index funds, mutual funds. There are companies you can definitely invest in for the long term and get possibly even a better return than 8 to 10%. Some of these companies can average better than the S&P 500 itself, and these are companies that you want to keep an eye out for when they go on sale. So when you are on Robinhood or any of your brokerage accounts, it is good to constantly keep putting money into it, whether it's in stocks or whether it's just sitting in holdings. It's nice to have money in holdings because when you do research on these companies, when you see one go on sale, it's nice to have the money right then and there to go ahead and pay for it, because sometimes when they go on sale, they'll dip down really low because everyone's selling off, and then everyone starts to see the price and they start jumping back in, and then the price will jump back up within the matter of days. So you definitely want to have the funds available to purchase when it's at a low. So yeah, guys, thanks for watching my video. This is the understanding of investing into a good foundation in your portfolio. Please like my video. Go ahead and subscribe, guys. I'm going to put a ton more videos out about trading and about what good investments are. I'll even do videos on some of the stock that I currently own and how to do research on some of these stocks. So thank you so much, guys. Go ahead and, like I said, give it a thumbs up. Please subscribe, and I will see you guys on the next one.